As 2022 is coming to an end, I wanted to do a total stock market review with you to explain how this bear market went, where you could have made money, and where most people lost money, and how we can do better in the future. So let's get started. First of all, Merry Christmas and Happy New Year, everybody. In this video, I want to spend some time to go through this website, which is called finviz.com, and we'll analyze it sector by sector. Now, before we start, I just want to let you know about a new free investing community I'm creating called Invest and Retire Community. So if you're interested in investing and retiring and learn about some of the strategies on how to achieve that, then you can click on the link below in the description to join this community. So you'll get a personal invite from me, and you just need to register, and you'll have access to a couple of awesome things, including free modules within the classroom. I updated the free chart course to free chart course 2.0, so it is the latest version. Some of the best invest and retire resources I have gathered over time, and also 7 tips to master Stock Screener as well. So if you have any questions about investing, feel free to introduce yourself, post in the community, and I also have rewards for the top contributors, people asking questions, participating in the community every single month. So I look forward to having you in this community. So you can see there are a lot of people already contributing, and I announce the winner on who contributes the most every 30 days. So just a quick shout out to Brian, Rosabelle, VJ, Kenneth. So if you don't know what this website is, it is finviz.com. So it's a financial visualization website, one of my favorite websites when it comes to investing. And after this, I'll post a video within the Invest and Retire community. So if there's any additional resources I want to attach in there, or if there's any specific questions you want to ask, you can ask in the YouTube video or within the community as well. Now, I'm sure a lot of us probably lost money this year in 2022. So I want to take a step back and think with you how you could have made money, especially if the S&P 500 is down. So first of all, let's look at technology sector. So here you can see Apple down 25%, and this is year-to-date performance. It's December 25th, Christmas Day today. I don't know why I'm recording this video on Christmas, but I work every day of the year anyways. So Microsoft down 29%. Semiconductors. Now for technology, consumer electronics, and software, Microsoft and Apple, this is mainly impacted by the interest rate increase. The Russian-Ukraine war also has some influence over it, but I think it's mainly the interest rate increase, which leads to capital moving out of the technology sector into other sector that is more interest rate resilient. For semiconductor here, you can see NVIDIA dropped 48%, and a lot of other semiconductor companies like Broadcom, AVGO, QCOM, Intel dropped 49%, AMD dropped 55%. They're all down significantly. And this is because there are 2 crashes that happened this year. The first one is interest rate increase, and the second one is the crypto crash, which the semiconductor industry derived a lot of revenue from. Now, interestingly enough, if you look at the last 1 to 2 quarters, you will see that the demand for crypto has dropped significantly, but the revenue for NVIDIA or AMD did not drop that significantly. And the main reason is because there are many different types of chips in the industry. And what NVIDIA was doing is to simply, instead of producing crypto-related chips, they change over to produce more data center related chips, and there's also a shortage in that area as well, so they're able to protect their revenue, but nevertheless the stock tanked significantly, mainly because of the crypto market and the interest rate increase. Now there are other smaller sectors that is classified here, but they're mainly negative, so it's quite straightforward. When you're looking at communication services, you see Google dropping 38% and Meta dropping 64%. For Google, this is mainly because we're coming out of the pandemic. So there's actually less demand when it comes to online advertising. So you'll see that their YouTube advertising or perhaps Google advertising is struggling a little bit to maintain that level of revenue. And for Meta, they dropped 64% because Mark Zuckerberg has spent a significant amount of resources on virtual reality, AR, and metaverse, which is why the company is renamed as Meta. And one of the biggest problems with the metaverse is that it is currently heavily linked with cryptocurrencies. So when crypto crashed, there are quite a number of metaverse coins that are also crashing along with it. And a lot of crypto related games also crashed. So then that also drags down the meta performance as well, even if the core business, let's say like Instagram, Facebook, are doing fine. Now, the next one is Tesla. Tesla is a combination of interest rates and also Elon Musk doing a lot of things on Twitter and acquiring Twitter, and uses part of that share he owns as collateral to finance the Twitter deal. I have a separate video on this issue, but basically Elon Musk is heading towards a margin call where he would lose all of his shares unless he sells more of that share to cover the $13 billion debt for Twitter. And based on my analysis, he sold $3.6 billion 2 weeks ago. So if he used that money to pay for the Twitter debt instead of running the business, then the debt level should be going down. So then his margin call level will be going down as well. So I have a separate video that calculates the price level where I think Elon will get a margin call unless he sells more shares. Okay, we analyzed majority, like half the market. And I would say most of the people lost money in this area. Now, I know some people invest in real estate stocks, also lost a lot of money. And there are a couple of reasons. Now, when you're looking at mortgage origination, it has dropped significantly. I have friends that work in this space, and they said that, well, realtors, the volume is way down. Mortgage origination, the volume is way down, mainly because there are less buyers, less qualified buyers to get that mortgage. And a lot of people are not really passing the stress test when the Bank of Canada or federal interest rate is at 4 to 5%, because the stress test will be even higher, right? So it's really difficult to take on that mortgage, and there aren't that many buyers in the market this year. Now, for a lot of real estate stocks, some that come to mind is Zillow, Redfin, Open Door, where some of them uses an algorithm to buy and sell real estate, and they can find undervalued properties within a given area using big data. But when the overall market corrects, that puts a lot of the properties underwater, meaning they're losing money on it. I think Zillow closed down their iBuyer program, and I think Redfin has done so as well. And when you're looking at a lot of mortgage lenders, because they're earning a differential of the rates and the interest rates suddenly increase and there's no more business, some mortgage lenders in Canada, they actually exited the market because there's no more business for them. So I would say the real estate sector got hit pretty hard as well. Now, the bottom left is the financials. Now, in terms of banking, it actually went down quite a bit, mainly because of the interest rate increase and less business in terms of mortgage. In terms of deals, IPOs, that also died down as well. Previously, there was like that SPAC frenzy where companies, they just get listed on the market and they have no revenue, no profit, and they're losing money and they just try to raise capital. And that pretty much has died down. So they're not making the fees from that. And there's also a lot less debt financing. So that's why there's less business going around for banks. Now, for Visa and MasterCard, turns out they are actually pretty resilient. So during that time, if you look at the chart, you'll see that it is just hovering within the area. So let me just quickly show you the chart. So here you can go Visa. So here you can see for the last year or so, they're mainly just hovering within 190 to 230. So if you invested in Visa, or if you invested in MasterCard, I would say you're actually doing quite well because you didn't really lose that much money. And if you're interested in getting this specific technical analysis template, just head over to the community, click on Classroom. I have upgraded the free chart course, so you can get it for free there. Now, one interesting thing is that Berkshire Hathaway is also making 2.5%. So for Warren Buffett, they are breaking even this year, pretty much, because Warren Buffett, his investing style and his company do quite well during a recession or during a correction, which is why he's so famous. Now, if you made money during this year, and you invested, you probably invested in healthcare or healthcare plans or energy. Now for energy, this one is quite obvious. It's mainly because the oil price is really high. So let me pull up the oil price for you, US oil. And here you can see 2-3 years ago, it was actually close to $0 for the US oil price, which was ridiculous. And then after the pandemic, it went back up. And then there was a frenzy because of the Russian-Ukraine war, and there's a low supply of oil and gas in Europe, which drove up the prices. And even as of right now, they're not really getting the Russian gas they're looking for. So that drove the oil price all the way up to 120, which historically, if you look at the last 50 years or so, yeah, I think the highest has ever been was back in 2008 at $140, $150. So the highest during this recent peak is 130. So that was pretty much the high for oil price at the moment. And as China is encountering a lot of COVID issues and the demand is dying down, and Europe is able to go through this winter currently, you can see the oil price is actually coming down to a more reasonable level, 70 to 80. Overall, oil companies should be making a lot of money this year. So I previously also invested in oil company, but I think I exited too early. But if we look at something like ExxonMobil, it went up 77% within a year. CDX went up 51%. And you have some other companies here as well. And you can see it's all positive for that sector. Now for healthcare, you also could have made money this year with Merck, ABBV, Johnson & Johnson, and LLY. So I think these are actually quite defensive in terms of their sector, which is why it's really hard for them to correct. So let me just show you an example, which is United Health Group. So this is more like a health insurance. So here you can see that historically the trend is extremely strong, and you can see they are always above the red and the blue EMA. So it's mainly like a buy and hold type situation. And then you can see there are multiple discounted opportunities where you can get into a UNH stock. And for this year, it still went up. And in the recent couple of months, even when the market is going down, it's actually just hovering at 520, 540. So it's actually quite defensive, which is why if you are the kind of investor that is set and forget, then this is perfect for you. So when you think about 2022, I'm sure it is a difficult year when it comes to investing. And for 2023, based on my forecast within Investing Accelerator, I think inflation will be quickly cooling down within the next 3 to 6 months. It might be even a little bit faster, and this will give the Federal Reserve the opportunity to reduce the interest rate. And we should be looking to flatten the interest rate really soon. Hopefully, we can avoid deflation. So I'll share a little bit more insight within the Invest and Retire community down below. So if you want to join the community, just click on the first link in the description and it will take you there. So in terms of the next video, my plan is to extend the forecast for inflation. Previously, if you look at my inflation video, it was only up till March 2023. And I'll extend that forecast all the way till June or July. So I'll explain how inflation is going to play out within the next 6 months.